Uh. All right. Good morning. Good morning. Good morning. Today is Monday, August 18th. Let's go deep dive right into it. So, beginning of the week. Today is Monday. We're not gonna rush nothing. We're not gonna force anything. As always, we want to come into the market and let Monday help us determine how the rest of the week should potentially, or how it could potentially play out. So we need Monday's price action to start the week off. So we'll just see where we're at now, get in sync with where we're at now, build off of that, look for a possible opportunity after that, and walk away and then go for the next day. So what I want to start with is the daily before we get started. So let's go ahead and look at the daily. And on the daily, you see that we have obviously took it out this high, clear as day. And from this high here, so you can go here, and then send to here, and then we see right here on the daily, we have an inversion. So this is already one sign that price wants to go to the downside. Okay. Let's actually make this, instead of make a blue box instead. All right, there we go with that. And then now that we have that, we know that this is the high that was taken out. Scoop this over. And now that we know we already have this inversion, we know that this is the area that we're looking to be in. And then from there, we'll develop our bias based on this area. So now that we know that, let's jump to the 4 hour and look at price on the 4 hour. So on the 4 hour, we also have this inversion and confirmation here. So we had this confirmation where price went up into, we took out this low here. So since we took out this low, let's look at what took it out. So this candle right here. So since this candle took it out, we're looking at this candle, see, is this candle going to close this imbalance or is it going to keep it open? So this candle's closing in 38 minutes. So we can already tell that price would need to push up from here 70 points on the open. So let's see how price opens. If we get that push back up to close this imbalance, if we don't, then we have our imbalance to show us that we may have continuation to the downside for a downside move. So let's keep that there. I'm going to keep all these higher time frame markups on one chart. So what I mean by that is I don't want to mix them up. So no sync right now. Because right now we're just trying to determine our directional bias for the time being and just seeing what we have to use. So as of right now, we're looking for price to either come to here this low to close this imbalance. You never know how price is going to open because this candle still has 40 minutes left technically. So from there, if it stays open, then that's still something we can use to go up into to continue to the downside. So let's see how price plays off of that. And then anything else that I see that I can use the midpoint of this wick on the 4 hour. Doing right now is just finding things I can use as a confluence. Boom. So 4 hour midpoint. Okay, so 2 levels we're focused on right now is this low, this wick low, and then this midpoint imbalance of this wick. And we know that we have, again, let's make sure we are, because we have 7 minutes left. All right, so again, we're looking, go back to put this on. That is so crucial to make sure whatever you have it marked up on, make sure it stays on that time frame and below. That is crucial. Something that's that small and you wouldn't really think about plays a big, big part. Just making sure your chart is organized. So here, once again, we have this daily high taken out here, this swing high with this push up. Last week was that retracement back down off of this push up after we had this push up Tuesday. And then you got Wednesday, Thursday, Friday, and then you got Monday here. So it's a continuation off of this drop down. We have this imbalance here that became an inversion due to Friday's daily candle. Body closed below it. So now we could possibly push into the downside. Now the thing with that is, it's Monday. So price can just stay in here for all it wanted to and not go anywhere and just give us like a 150 point range and not really go anywhere. But we don't want to anticipate it not doing anything. We just want to be aware that it can just sit there because it's Monday and it can just consolidate for the whole day. So we're not expecting a big push or no volume on a Monday. Could it happen? Yes. So just put yourself in the right position. So I'm looking at push up, this inversion, we got this drop down. This is the low that we looked at on the 4 hour. And then you can also look at the midpoint of this, but since we already have all this stuff in this area already, there's no reason for me to use the midpoint when it comes down to it. So let's go to 4 hour. And then like I was saying on the 4 hour, we have two areas which we can go to right now at this moment, which will be the midpoint of this wick, which we touched once. And then we have this low of this candle, which is the possible imbalance that it could be creating in 33 minutes. So we want to see how the market opens and see if we get that 70 point push back up, or are we going to keep this imbalance open and then possibly continue to the downside, breaking this low here and causing that continuation. And then from there, we could possibly come here to 23,670s. And when I call price, I'm going to say just in price in tens. So 670, 680, 690s. That way it gives you a general area of what we're looking for. So let me look and see if there's anything else I want to use at the time being. Like, I like this wick. I like the fact that price is under it. From me eyeballing it, I can see, the body close below it. So that's a good sign, showing willingness to go to the downside. So I'll keep that in mind. Let's see. Because you're doing all this, but you could be focused on a 5-minute trade. So you don't want to look at the 4 hour and be like, oh, I got to wait for the 4 hour to do something in order for me to take a trade. Like, no. We're just getting a potential directional bias for right now. Even if it became bullish right now, we know what it'd be going for. It'd be going for this imbalance. So just put yourself in a position. Let's see. Here now. Yeah, that's pretty much it for that when it comes down to it. I can definitely still see price pushing up to go to this imbalance. This imbalance can even be inverted. So you still want to put yourself in the predicament of, okay, what is it doing at my time, which is our time right now? Once the market opens, we still need that 15 minutes to let it do what it needs to do. I say 5 to 15 minutes, let it fumble around. And then from there, we develop off of that. And then before the market opens, look at the 1 hour real fast. We're below Asian range. Asian range high is right there, right at the high of that daily inversion. We're consolidating. Look at the midpoint of this wick on the hour. Yep. Broke it a little bit. So that's so. Well, you see we clearly had this consolidation right here. And we're bouncing off of this consolidation here. And that's why I say I can still see it going up, because we're bouncing off of this consolidation here. So if it was to break this consolidation, it'll be a nice potential move to the downside. So this consolidation here on the hourly. So I would even say there. I want to include that one. Body, wick. Did that wick break that low? 30 seconds. Oh yeah, it didn't. So let me include that as well. All right. So we pretty much got what we're looking for when it comes to direction. So let's go ahead and see how this market opens and then go from there. Like I always say, even if I see a trade when the market opens, I don't take it. I let the market do what it needs to do first. push-ups. Like I said, I want to keep this chart clean for a reason, because I'm marking up lower time frame. I don't want anything to overlap my higher time frame on what I'm looking at. And then look at all this mess right here that price need to get through. But we should get through it pretty clean. Let me see, do we have any news coming out today? Okay, no news today too. So our moves today are going to be strictly off of this market volume. So right now we are at a 40-point push. So now 15-minute. We know that this is 4 hour, 1 hour, 4 hour daily. So now what I want to do, give it some time, but also get in sync with what's going on. So a lot of times you want to look left and see what's really going on here or here, but focus on what's happening right now, especially when it comes to lower time frame market structure. As long as you know or have a directional bias or an idea of which way it can go, just focus on lower time frame, and then from there you build off of that. So let me actually scoop this over. There. So as you see, we got low taken out with this, and no low taken out. So we're in this range right now from here to here. Clear range. Come out of that discount, pushing up. So let's take out that high. Once it breaks out, then we'll be able to use price action starting here, and we just stay in sync with it until it gives us an area where we're likely to look forward to do something else, like go down or continue back up, and then from there we just build off of that. So let's see if we get opportunity after this happens. So we got to break out, take it out the buy side. So right now, you already know what this is doing. This is giving you that push up to go for that 4 hour imbalance. Because if this candle closes below here, then when that 4 hour candle closes, then this will be that imbalance right here. What you would love to see is it get real close to it, stop, and then it leaves that small 4 hour imbalance there. And not saying that we will buy or sell off of it. It's just a small imbalance, so price can fill it pretty quickly, and then it can make a decision off of that. Like it'll consolidate. And once it consolidates, we'll just get in sync with whatever's going on and just tackle it off of there. So now that we broke out, if it doesn't come back into this range and it continues back up, my key low will be here. price to, let's see how price plays off of it. Because that price fails to go for that imbalance, and we got some time left before it's done, then price can just pull back in and give you a continuation inside of a discount. We just need this to make it swing high, but that'll be the close of that forward candle, so that's pushing it close. So let's look at the 1 minute. Yeah, so like the 1 minute right now, our range on the 1 minute is actually, let me go back, keep this on the 5 minute. Real quick. Visibility 3. And on the 1 minute, we are actually here. So on the 1 minute, this could be that. This can go into discount, and it'd be that continuation up off of this imbalance right here. Because it's sitting inside of a discount, which that's what that wick was. Right now, we're just following price. There's always opportunities available, but you want to take the right opportunity. Not focus on the 1 minute too much, because I'd rather have the move on the 5 minute, especially on a Monday. I'd rather have it on a higher time frame. Let's see. 6 minutes left. Okay, those on below. Inversion. Now this is a 1 minute inversion. So if the inversion doesn't hold up, then what they're telling you, price wants to continue to the upside. Just because you have an inversion doesn't mean it just wants to flip automatically. That's why with the model we have the inversion and the confirmation, because you can have an inversion and it goes right back above, and now you're like, man, it should have worked out. Like, no, that's not how it works. Let's see how this candle closes. At the 800s. All right, let's see how it closed. It closed above the midpoint of this. Should get that continuation up. We'll see. Price is at that midpoint, so we can get consolidation right here. And you guys know, like, I like trades that are like this, where you're catching the trade is it a deeper discount or a deeper premium? But when it's here, and it's just sitting around here, that's not saying that you can't have good trades. It's just most times you're gonna get consolidation. So I rather wait for a better opportunity. Not saying I'm taking one right now with this, just saying in general. But you see also we're bouncing off of that daily inversion low. Okay, pushing up. Let's look at the 5 minute. Real quick. This is giving us that swing high for that close. So if this gives us that swing high here, then we can look at the 5 minute range from there to there. Yep. So that pullback makes sense because it's just creating this range here. And then we can go take out that low and then push right back up because it's falling back inside of this old range. And we'll fall inside of this busy here. And if this candle closes, yes, this candle right now is inside of a premium, but it's inside of a premium of a broken range. So either you're using this low and this high and having this smaller range, or you're using the fact that we just broke out and it went right back inside this old range, and you can just extend it like that. And you see that's in a discount. But I like to keep it like this because I like to remind myself that it's a breakout. And what happens is you'll keep it like this and you'll forget that that was a breakout, and then you look for it to go to discount and continue back up. But you forgot that it just broke out of this range and took out this high, so it can go for a low. So it just helps you remember what's going on. And this is why you don't take the opening. You get caught with them fake outs. Nothing wrong with it, because if you catch trades like that and you're just catching the opening volume, cool. But when you got a good market and you got a lot of volume in the market, as soon as it opens, wick, smack, take you out and go the other way. And that happens a lot. So I'd rather just avoid that, wait for a better opportunity. There's no reason to rush it. See how this sets up. If this candle closes like that, it can stay like that and it can consolidate here. And this smaller range, that'll be a deep discount, but it may take out that low before it wants to continue back up. But you want to see like kind of wick it or sweep it, then break it. If it broke it, it still can go back up, but I would prefer it sweep. But we'll see what the market gives us. Okay. This 5 minute closes, and then we have 15 minutes to that 1 hour candle closes. I mean, a 4 hour candle closes. And that is that candle. Okay, so 10 seconds left. So now I want to just mark up this range. I want to keep this range on here to remind myself that this is the bigger range, but this will be the smaller range inside of that bigger range here. And just eyeball this. So as you see here, see how we're in this discount. I looked at it from what I was talking about earlier, like this. And if I go down to 1 minute, right up that lower quadrant here. So my key areas when it comes to this range will be either this lower quadrant or this upper quadrant. Anything in the middle, I'm pretty much treating like consolidation, just back and forth, and then build off of there. So most people look at that like supply and demand, but supply and demand is off of extreme levels, high and low levels. But we're looking at it as it's in flow. So that's how we look at quadrants, because we're looking at as prices making new ranges, that supply and demand is based off of that range, not off of the whole chart or a 15 or a 1 hour. It's whatever the chart is doing. So you either have a deep discount or a deep premium, and we had a deep discount here. So you have an inversion here and confirmation here. That's a 15, 16 point stop loss, 33 point to the upside. But like I say, this was a sweep of the high. So we could get this wick filled. This wick can get filled with this 15-minute candle pushing up to go fill that imbalance. But the fact that this was that break, then price can likely push back to the downside from this premium. So let's go back here. So this is just waiting for the best opportunity. But you see how, if you know how to find the right levels, then you automatically see where you're at, and you're not guessing what the market is trying to do, because it's showing you. So this whole time the market has been playing out, we haven't had to guess on anything like, oh, it's doing this, or what is it doing? Like, we know what it's doing, we see it. Here's the. This is that 1 minute inversion we had earlier. We broke back above that. So we break back above this, then that can show signs of continuation back to the upside. And then that would have been here. And then you're breaking this SIBI here, or ceiling, and then breaking this inversion to continue up. Remember, waiting for that 4 hour to close. I'm gonna blow my nose. I'll be right back. Would you look at that? See? And it all makes sense. So this break of this low happened because we had this breakout of this high. And trying to chase the trade off of here, knowing that we had this break of the high, you would have get caught with this. You would have got a nice push up and then it would have came down and stopped you out. And you would have been like, man, why did it do that? Because it already did what it needed to do with the buy side. It took it out already. So that's why price went to the downside. And that's why it's important to wait, especially on a Monday, because you can get consolidation and then the market does this where it's just back and forth. And now you're just stuck between ranges, which is okay. You can still find opportunities inside of ranges, but you got to know what's going on inside of that range. Otherwise, you just get chopped up. Okay, cool. Remember, keep that on a 1 minute right now. Scared to mess up. Back to a 5 minute, and this is that breakout I was talking about. And then look where we're at inside of this range. Just sitting at the low. So if you looked inside of here, you had an inversion here, a tiny inversion here, and the confirmation that you would have had on here, the first one you would have seen was this one, and that initial stop loss was there. So once that broke, it's like, okay, I can't use that one, but then you have another one right here. That's an inversion here. And then from here, try that break up. No confirmation on the 5. Nope, it's right here. But remember, we're in consolidation. So you got that. If we look at that, look at this on the 5 minute, but then look at all of this. So it's like, do you want to risk it? Is that what you want to risk? Because right now, this would be back to that old high. Looking at it like this. Take it back up. But you'll want to see this close and then price continue to the upside. Because you had that break and then you had this sweep here. So price still could potentially break it, but then we're bouncing off of this 5 minute model. They'll see. It's like, do you want to deal with stuff like this? I'll keep this on here so you guys can use it if you want. It should show you. 19 points for 60 points in a market like this. It's like, if this was maybe 10 points, it'd be cool. But when you're dealing with the wicks like this and trying to risk 19, almost 20 points, depending on the contract size, that can play a big part. Or you can go risk 30 and then go for 1 or 2. But you're looking for price to go all the way up. We have this 15-minute candle closed in 2 minutes. So that means we have that 4-hour candle closing in 2 minutes. And then you look at that 4-hour. Look how much of a retracement we have on the 4-hour. So for something like this, you're like, dang, well, probably it could go back down to this midpoint. Down to that midpoint, it's going to be the stop loss. So right then and there is when you're seeing something like this. Let's say you're in something like this, and you're like, oh, you're watching it. You're like, man, I don't like how I look. If it's pushing down like this, and let's say it broke the initial stop loss and it's down like 10 points, why not just close it out and say, you know what, I wait for another opportunity, or for it to go back above? Because let's say this is 20-point risk, right? And let's say, like, you should have seen that happen. So right here. So let's say this is 10 points, right? And like I told you guys, we took out that high. So when you have this model and you're looking for it to play out, and you're watching it go back and forth at your entry, and you like, I don't know if it's going to play out, I don't know what it's going to do. This is a 20-point risk. 20-point risk based off of what we just seen transpire. And I marked this up so I can show you guys how when you're managing a trade, you're into it, you're down 10 points, and you like how the trade is playing out, and you're risking 20, why not close the 10? And then you close the 10, and if the trade comes back to your entry, then you get back in. It risks a 20 again with half the position you did the first time. So now you're letting the trade play out, and even if it went against you, you're still giving yourself a second chance to let the trade play out if it does, because this still could be a break. We had this break right here, we called out. So just looking to see what this is going to do and if price is going to push to the upside. This 4-hour imbalance is open. So if we go now, 4-hour, that is now this 4-hour civvy. And this is why I'm cautious on Mondays, because Mondays I play that part to where it's like you don't know what the market wants to do, because most times we're getting consolidation, we're getting nasty price action on Mondays. So even with that scenario with this trade here, if you close out at 10 points, look at the opportunity you would have had again on a smaller position. Now that's not saying that this trade is going to play out, because you still have to deal with this civvy right here at the midpoint. But remember, this range will be like that. So that's still inside of a discount. But keeping it here to remind myself that this was a breakout. So we can potentially get a breakout to the downside before it even wants to go back up. Or we can use a sweep and go back up. But just putting yourself in the right position. And let's go look at the 1 minute. So this was that 1 minute range we talked about. We had that push off the model back into a premium. We had this inversion, price went back above it, and it failed back to the downside, and we blew back down, taking out this low. So now that we took out this low, we have this low right here, and all we have to do is get in sync with that. So let me show you guys that. So let me keep this on the 5 minute. All right. So here's our 1 minute. We brought back below. So now let me show you. Since we brought back below, our key low will be here. All right. But when you're looking at this range, I'm looking at the breakout of the imbalance. It made that swing high, and then the range would have been like this. From here to here. And then price went down and took out that low. And then from that low, now we're going to have that swing high. And then if we have that swing high here, if it makes that swing high, then it comes back down to discount, that could be that push back up. If price wants to continue back up, taking out that high, then continue back up to the upside. Out of this 4-hour consolidation. So let's see. So let's actually take this one off right now. This initial stop loss is broken, so we don't need this. We don't need that. Remember, if you're not using the model, you take it off. Try to be clean as possible. So we know that this was the key low at that point in time. So let's wait to see what's going to transpire from here. So do we have a swing high yet? No. Okay, now this candle took out that high, so we wait for another minute for another candle. Let's go. And you see how we came down inside of this consolidation between that consolidation high and then this 4-hour midpoint. Price is playing inside of here, which is this price action right here. And then now we're getting that pushed to the upside. So from here, you have this inversion here. Wait for that swing high to get made. So the price is showing that continuation, steady taking our highs on the 1 minute. But remember, we still have this 4-hour imbalance we just made. So if price wants to hold up with this daily inversion and this 4-hour CB, we can come back up here. What was that, like 70 points from the consolidation? Or 50. So that's not that far away. You want to get caught up in price ranging and you're trying to catch the range. You don't need to. Just wait for the best opportunity. Take it and walk away. So like even right now, if this was a swing high and then we had this low and then that high, this confirmation will be all the way up here. That'll be something you'll have to be like, okay, well, this is a nice distance away from my inversion. So that right there by itself is another 17 points to potentially push another 40 points. So it's 1 to 2. So you have to ask yourself, is it worth it? Is it worth you risking 18 points? For me, not right now. It's a Monday. If I'm risking 20, 25 points, it got to be a decent trade. I'm looking anywhere between 10 to 15 points. That's what I'm looking for. We can get something like that, cool. But 18, 20, 25, no. No, that's not saying that it can't go higher. It can keep running on and blow past this imbalance. And you look at that like, dang, I missed it. But technically, you didn't. Now, looking at this too, you still have the bigger range, which would be this high, that low, this high, and then this low. So it can be like that. So you'll still be in that discount here. And see where it's sitting at, right at the midpoint. And then you look where that inversion is, lower quadrant. So I would love to have this down here. But that's preference. And that's what you're trying to build. Preference, what you prefer. So, and we also have this long wick, so you can use this wick as a reference. So let's go do that real fast, just to see the price. $7.88. So that 4-hour wick is $7.88. So 780s. Let's see if it breaks out of this range here between these two wicks. 15. And then look at all that consolidation. So let's see. Because you do have this 15-minute wick you can use too. I want to have too many midpoints on my chart. You know what? Let's use. Yeah. Let me just look at the price on that. I want to keep it on my chart though. What is it? 790. So not that far off. 10 points. Okay, like yeah, and like for me, even with this, you have this bigger range. I would look at it even smaller range. It would be from here to here. I was telling you guys I was waiting on that swing high to get made, which got made right there. So I would be looking at this, and see, I would want price coming out even further, and but I want a lower quadrant in this type of range. No, not really, because it's a smaller range. But with this bigger range, yeah, I would. But if you look at it, the lower quadrant is here, and then that'll be inside of a discount, and then price can push down and then revert back up. We'll see. But you want to get good at navigating the market like this, because you get to avoid stuff like that where it's not going anywhere. And it's not to say that you can't get good trades out of this. You can, but me risking 18, 20 points to see if it's gonna play out, no way. Not with the contract size I'm trying to do. Let's take. And like sometimes, I'll tell you guys too, when a price is super close to initial stop loss like that, I'll take a small trade. Like if it's close like that, why not? It's 7 to 8 points, and if it didn't play out, it didn't play out. But if it does play out, then you push back above outside of this confirmation, then you get that continuation right back up to potentially take out that high. Now your risk is super small. That's having a strategy when it comes down to it. What besides having the model, there's ways to look at it. So sometimes you can look at it to where it comes right in the confirmation. You take it. You wait until it goes into confirmation, plays around, then you take it. You wait until it gets close to the initial stop loss, and then you take it. You take it after it wicks the initial stop loss. It doesn't break it. It wicks it, and then you take it. All types of ways of looking at it. But when I'm looking at it right now, I'm waiting for specific things to happen based off how market structure is playing out right now. So that's why you want to wait for the right opportunities, not just take anything, because there's no purpose to. So there's that wick to the initial stop loss. Let's see how that plays out. There's that wick. Let's see if are we wicking off of it, or is price actually going to pull back to the downside? And then if you look at the midpoint of that wick, I just love the midpoint of wicks. That price is, I look at the price. It is 760s. So 760. But this is what you want to learn how to see before it happens, because the market opened here. We already seen this happening. So when the market opened, we wasn't expecting no big push. For one, it's already Monday. So we're already expecting consolidation. That's a no-brainer. Even if it doesn't happen, we're already expecting it. But when it comes to you looking for opportunities, you're not just chasing anything. Like 20 point, 25 point risk is good on something if it has potential to go somewhere else. But if you don't think it has potential to push right now, then why chance it? Just wait for the right opportunity. Still sitting at the high of this hourly consolidation. Still sitting inside the 760s. See if we break down 750s. Because what you want to see happen, which would be good if it pushed down and gave you a price leg with the model inside of this price leg pushing back up. But price can very much bounce off of this since we had that wick. But looking at this price action on a 15-minute, you don't know what price wants to do yet. Let's glance at the 3-minute real fast. Got a 3-minute inversion. 3-minute busy here. So that can be something price is using right now. Just mark it up. So right there. And then so got 5-minute. Yeah, there is no 5-minute. So just a 3-minute. And that candle has 5 seconds left. Have this sippy right here. 1 minute. So what time is? We had this expansion down, and then I would say from this long wick up. So where we're at now, this is a 90 point range since 2 this morning. And remember, like I told you guys this morning, we got on a call that we had that daily inversion that we had made. So price can be showing willingness to go to the downside, potentially. If you have this inversion here, right there, there's a gap, so we use a gap as well. So you have that inversion up, and then confirmation right there. That initial stop loss would be here, and that's about 15-20 points. we're coming off of this consolidation, hourly consolidation. Let's look at that also. See that off of here. But we have this daily, but we're looking at what's happening right now. Don't let the daily throw you off. That's just something that we see that's transpired. That thing can take forever to happen, or it can take one day. It depends, but you want to focus on what's happening right now for you. Back to 15. This is nasty work. This is where you get caught up at, man. Let me go look at ES real fast. Made a lower low here. Yep. Same thing. There you go. Straight push down. And see how we had that midpoint wick and we push up off of it. And then we're back at that confirmation high, but it's not the confirmation we want to take because of where it's at inside of the range. Okay. Let's see if it bounces off this E right here. There's that BISI at the 770s. Inverted that. You gotta expect a bunch of that to happen. Why? Because you're inside a consolidation. And sometimes you'll be like this, and you'll be thinking it's about to do something crazy. No, like look at that 15-minute, look at that 5-minute, go see what's happening. And this will let you know, like, okay, even if you had an opportunity, be cautious. Wait for the right one. It's not doing anything right now. Even if it's pushing 40 points here, 30 points here, 50 points here, yeah, you could get that, but look at the risk as well. Because you always want to put yourself in the mindset of a crazy market. Because you don't want to build bad habits and then you get into a month where the market is going super good and then you have super bad habits. It's that 3-minute, take that off. 3-minute. Keep this inversion on until we break out of this range. Let's see how price acts. If it goes and sleep these equal highs here, falling back into this confirmation. It's gonna go for these highs as well. So if it goes for these highs and it goes for that high, especially if it goes for this high, I'm looking at how the bodies react to the midpoint this week. And that's why I do my candles one solid color. Like I'm doing it 2 colors for the live, but most times I have it one solid color because that's all I'm focused on is market structure, midpoints of wicks, and its direction of bias, and the dealing range, and how it forms the dealing range. Like I think tomorrow I'm gonna have all black candles. Like I can even do it here. It's all the same thing. So we took out that high. So like, let's say if you want to take this opportunity, right? Let price do its thing and wait for it to go back below the confirmation to take your entry if you're looking for the sell. Because you don't know how far price wants to drive up before we get that initial push back down. Unless you're looking at a sub lower time frame than a 1 minute. Look at that 15-minute. And remember that 15-minute wick here was right there. Make it a different color. This is that 15-minute. Back to that daily inversion low right here. See how this candle closes? Does it close with a body above the initial stop loss or the wick? Look like we're getting that push up right to that 4-hour imbalance. We talked about that earlier, how if that 4-hour imbalance was made, price will try to run up into it, and that's exactly what it's doing. So now, in this case, all you have to do is wait for a potential sell model inside this 4-hour, but we still have this Asian range high still intact if it wants to go that high, because we're bouncing off of this hourly consolidation. Yes, sir. Now let's look at 5 minute. Yep. Push up 3 minute. Oh, missed out. Yeah. Okay. Missed that 3 minute one. Inversion. Confirmation. Wick. Okay. This will be the bigger range, but the range that it's currently in at the time being will be this one. Look at this back and forth. We go market that 3 minute. Start right there. See that 3 minute there. Straight shot down. This is all 3 minute. Okay, so he broke out his range. So take this range off right now. So we wicked that low. This consolidation. Look at the body. Put it to low. Yeah, price back and forth. I'd rather have a nice size expansion at close, so not these wicks, and then from there build off of that. So if it don't give me that, I don't see nothing too intriguing. Just because it can go either way. I would love for that 3 minute model to play out and go back above that high, but too risque. And that's the thing, man. It's like with these moves, you can see opportunities inside of here. You can, but it's just not worth it. They're not, especially not the headache. If this push down, broke below this body's inside of this wick, we'll have a even smaller range from there to there. We'll see. We'll give it 30 minutes. See what the market does from there, if it gives us something. It looks like we're going to get something later on in the day today. Gearing up for Tuesday, but we'll see. So if you look at that daily, like it's just sitting there. We already had that rejection there. add this confirmation. 30 points? No way. With inside of this, risking 30 points? No. I will not. I don't care if it dropped down for 700 points. No. That's just giving yourself bad habits, trying to take stuff inside of here. Now, if you're in and out, something you see as cool, small risk, like if you're taking something like this, it broke the initial stop loss and then you followed it back up and then you had a small opportunity here and you took it up and you caught 20 points and you only risked maybe like 5, cool. But risking 30 points inside of here, I can see 10, I can see 15. 30 points, no. Not in this. And on a Monday, no. I hope this is helping you guys when it comes to this, being aware of this and not just chasing this because it feels like there's opportunities there. Like, no. Don't let the color of the candles fool you. Like, oh, it's super bullish, it's super bearish. Look at market structure. So I keep my candles black. More consolidation, and it's sitting at this consolidation right here. I can show you guys real fast before it takes see, and that could be that push right back down. I can tell you what, with a good move with that. Let me just show you while we just sitting here waiting. Let me put this in a folder. Back to that 3 minute. It's up to you guys. With me, oh no, it depends. Well, we took out that high, so yeah, I don't like this price action. But oh, I want to show you this. So you have this consolidation here, right? You drag that over, and you see if we're playing off of this range, then you see you have this inversion. So price went above and made a small confirmation right after this possible inversion. It's not inversion yet. So they made this inversion, had a small confirmation here. Then you could be confident in taking this to the upside because you got this consolidation that it had to break back down below. But as you see, it's keeping price at the downside right now. But we do have this right below. Post this too or record it. Told you guys I gotta try to make sure I remind myself to get content. second. All right, trading with the team, and this is what you don't want to be in. Back and forth, price not going anywhere. It's just real rangy. Yes, you can have opportunities inside of this, but if you're trying to chase all of this, this is where you get chopped up at. And this is Monday, so we had our expansion. Now we have a consolidation. Monday is setting up the rest of the week, so we want to allow this to play out, and then from there find a potential opportunity. So you gotta let the market do what it needs to do in order to find a good opportunity. We do have price bouncing off our initial stop loss though, so let's see how that plays out. So yeah, it is bouncing off of here right now. That's an iffy. Yeah, I got to, man. I'm trying to push myself. I've been doing good so far, so I'm trying. It's gonna benefit all of us. It's just gonna grow whatever we're doing. Man, this is a nasty price action. See if it breaks above and gets above that consolidation. It stopped nicely right at the initial stop loss, but it's just this. Mm-mm. And all this right here is actually sitting at this consolidation right here. Like something like this, if you would have seen something like this on a market that was moving good and you seen it stop like that on a dime and then went back up, oh yeah, we gonna be bullish. But inside of this market, ain't no telling. So you know what? How long it's been? Yeah. You know what? We're gonna call it quits for today. We're not even gonna mess with this market. We're gonna let this market play out. Please practice patience inside of this market. Don't deal with it. Don't just jump in it because you see a potential quick opportunity, because it may not last long. Wait for the right opportunities, wait for the right trades, and we'll kill it tomorrow. Just wait for Monday's price action to play out and see if we got a better opportunity come Tuesday or later on today. So we'll see. But I'll see you guys tomorrow, man. Appreciate it.